Hi guys, today we have with us Subrata Mitra, partner at Accel Partners, who's probably the most successful investor in India today, vindicated by the acquisition of Flipkart by Walmart. Thanks Subrata for taking out the time.
Thank you.
So I just want to start out by laying a premise from the Let's Venture viewpoint, right? I think, let's say about 10 years ago, very few investors were in the ecosystem. And from an angel investor perspective, nobody had access to a Flipkart or an Ola, right? Very small set of people.
Yeah.
But I think the purpose of Let's Venture is to expand that base and enable more angel investors to get into the startup asset class, right?
Yes.
And there are more startups in the ecosystem as well.
Yeah.
Now, in that environment, we have a lot of new angel investors. How do they kind of go about looking at the ecosystem and forming a thesis, and how do they catch the next wave of startups?
And you know, there are multiple ways to do it. The way, let's say, we used to do before Erasmic became a fund, Prashant and I, we made I think 5 or 6 personal investments, and that was like an angel club where we would make an investment and some of our friends would co-invest with us. And there it was actually pretty simple. We would use that same network. It was about 15-20 friends who we knew each other mostly from the US.
Right.
We would actually either identify a new company here in India, or some let's say Dheeraj from U Sigma, he was moving to India from Chicago, and one of these guys in the network actually happened to know him a little bit in the US.
Right.
Then they would recommend that, oh, go talk to this guy and see if you like him.
Right.
So it would actually be that network that sort of identifies what we think could be a winning company, and then bring everybody else in as required.
Right.
And I think that's what you guys are trying to do in a sort of a more systematic platform type of way.
And but in today's context, when there are so many more founders out there, how does one prioritize a thesis, right? When an angel investor now has access to hundreds of companies through a platform like Let's Venture, how do they decide? And I'm guessing Accel sees hundreds of companies as
Thousands
well.
of companies.
Thousands of companies, right?
Yes.
So how do you decide on what criteria you would allocate your bandwidth and allocate your priority to companies? And therefore, how does that funnel look, and how does the angel replicate that? Because he doesn't have a team.
No, so angel doesn't need to replicate it, because typically for a VC firm, we'll do 30 or so investments in a particular fund.
Right.
And we will, if we did invest in a company, we'll probably try to see it through until it sort of doesn't work out or works out.
Right.
So the commitment is much, much larger. To that extent, the angel is very different. They can get away with putting, let's say, 20 lakhs or 10 lakhs or whatever they can do, and then say, doesn't matter whether the company does very well or doesn't do well, I'm not going to come back and put any more money in it. I mean, I got some of my friends to actually become angel investors in Flipkart, right? So it was the same, right? So to that extent, I think angels are different. So they could potentially have a much wider, array of things that they play around with, and then potentially start picking from that. And that's how I would go about it. So let's say I had $1 million to invest. I'll take the first 100,000 and try like 15 different companies or sort of areas or domains and things like that.
Right.
And some of it I'd like, some of it I would get good at, and maybe form a network of people who help me navigate the other ones. So I'll try to sort of divide and conquer within that first 100,000, 150,000, and then maybe double up a little bit more on the ones that I start liking from that pool.
I want to just switch topics a little bit. You identified e-commerce and Flipkart, and you identified Freshdesk, and we can go through several examples.
Sure.
At this point in time, what are the big opportunities you see in India? What are the large outcomes in the next 5 to 10 years the Indian market, in your view, can create in the ecosystem?
So there are several, so we have actually doubled down quite a bit on the sort of the B2B platform space. So that is actually fairly wide in India. There are logistics companies, so we've done 3 different ones on the logistics side. There are procurement platforms, there are platforms for SMEs, and so on and so forth. So I would say we probably made about 8 to 10 investments on the B2B platform side, and we do think that in the next 5 to 10 years, those companies will, a lot of them will become pretty big. Fintech has been sort of an area where we have doubled down as well, both on the consumer side as well as sort of the more structured lending, which is to corporates and others. Data related companies, which used to be very hard to build in India, now people are actually plugging in money to get access to the right kind of information and data. And then comes related to that is obviously AI, machine learning, and some of those. So these are some of the ones that we have kind of gone over the last, let's say, 2 to 3 years.
Funds such as yours, which started out as true seed funds, right? You were, let's say, $50 to $100 million kind of funds, and now a lot of these funds who have done well have graduated to $300, $500 plus $1 million funds. Does that change the nature of investments? Would you start moving to slightly later stage? And does that open up an opportunity for angel investors and micro VCs that are cropping up? How do you view that dynamic playing out in India?
So I would say something which is specific to Accel, and then maybe address the broader question.
Sure.
At Accel, we still want to be, doesn't matter how big a fund is, we still want to find the flip card and write the first check. Right. So to that extent, even today, I would say I've written a $200,000 check, which we haven't talked about, in a startup that is like 2.5 people. Something like that. So we do want to continue to do that. But at the same time, we are also writing the $5 million check and the $15 million check, right? So things are changing a little bit, but we don't want to completely switch out and say that now we'll just depend on the angel investors to get us all our good deals, right? Then I think we lose our leverage. So that's us. I think as an ecosystem, the answer could be slightly different depending on what the partners of the firm believe, and because out of the 6 partners, I think 4 of us have been entrepreneurs before. We are completely comfortable writing that $200,000 check even from the $450 million fund. Right. And maybe others are not. So they need to pick their battles based on what they like. And maybe there is a way, therefore, for these angel investors to bring the company to a certain level where these other VCs would come in and write the next $5 million check.
To ask a slightly different question. Now that, the reason the angel market exists is because there are entrepreneurs who have not yet met the criteria of certain VCs, right? Or the founders want to take a smaller angel round before they go and take a
and I think something that Binny talked about a little bit, which is mentorship. Right. I think we are again probably slightly different. We have a 50 people team on the ground just for India. Not every fund is like that. So it may become harder to get a lot of mentorship from a venture capital firm. Whereas angels, if you find the right people, they could actually help you navigate a bunch of problems, outside of your daily routine. So even that I think is important.
Let's say at Series B and beyond, how do you see the cap tables kind of changing, right? Because a lot of times when an angel investor gets an opportunity to exit at Series B, a lot of situations they actually don't want to, right? Because they also want to ride out the end outcome. What do you think is a fair dynamic to have between angels and VCs? Because there's a fair bit of negotiations that happen, right? Because sometimes the VCs or later stage investors want to have a simpler cap table, whereas the angels who have supported the company till a particular stage also want to stay on, right?
I think again I will give 2 dimensions to the answer. So there is a structural issue. If you have, let's say, 15 angels on the cap table, getting a signature means sending the document to 15 more people, right? Whereas typically if you had 2 institutional investors, 2 signatures are going to be enough. Let's say you want to go for an M&A where you want to get acquired, and then out of the 15, 3 guys are traveling, you're going to get held up. So there is a structural issue that needs to get solved, and maybe there are ways to solve it, that beyond Series B all the angels come in as a single vehicle or whatever it is, right? And the second dimension is whether the angels should actually benefit from the economic appreciation that could still be left in the company, right? And I think they should, right? I don't see any reason why somebody who supported the company should get booted out, right? And as much as in the right company, I would like to own more.
Right.
It does not necessarily have to be at the cost of throwing somebody out, right? So I think there is a balance to be had, and typically that's not a hard balance, because these angels will not continue to fund, so they'll probably keep getting diluted, but they want the economic upside to still be there beyond Series B, and I think that's perfectly fine.